Hello students, you're welcome to this lesson. I hope you all are faring well. That's amazing. So a lot of students have a problem with understanding time frames and how they function and how they affect a currency. All right. So especially the beginners. In this lesson, we would be talking about how to navigate time frames, how to do your analysis, how to understand time frames and how they function. Now let's get into it. Now, in Forex, we have 5 trading days a week. All right. That's from Monday to Friday. And you understand that in each day, we have 24 hours. So within these 24 hours, you're going to be having either buyers or sellers, or you're going to be having buyers and sellers in the market within 24 hours. All right. So that is what moves the candles. So when buyers are in the market, you have the formation of bullish candles. And when sellers are in the market, when more sellers are in the market than buyers, you have the formation of bearish candles. Now, when you come to your chart already, I'm sure you already know how to set up your time frames above like this. If you do not know, then please check out our previous video on how to set up your trading view chart properly, and also to put these tools where you'd be able to navigate the chart. Now, let's get into this lesson. So if you check well, you see that D has been highlighted. So basically, you can start your analysis from the top. That is how it should be. So you do a top-down analysis. It means when you open a currency pair, like let's say UJ, USD, JPY, all right? So you want to start analyzing from the top, from the higher time frames, like from the 1 week, 1 day, 4 hours, all right? And then moving downwards to the smaller time frames where you'll be taking your entries. So it's not a down top analysis, but it's rather a top down analysis. So here we have 1 week, and when you check on this chart, it means one candle, it took a whole week for a single candle to be formed. All right, it took an entire week for a single candle to be formed. So basically, we have like this candle this week, this one this week, and last week, and the previous week. As you can see, Monday 23rd September, you have Monday 16th September. So basically, it took an entire week for each of these candles you see here to get formed. So now that when you open this chart on the weekly time frame, you want to know the key levels. So basically, you're going to be mapping out your key levels, and you're like, okay, this week, this particular time, the market was at this level, and then you had the market being coming down to this level. All right, so let's navigate this here. You had the market, you have this key support zone, you have this other key level here. Basically, you have key levels. All right, so you move down to the daily time frame, and now you discover that each candle on this daily time frame was formed in a single day. It means that it took 24 hours for each candle to get formed. Like now it's basically like 4 a.m. As you can see, the new candle has started forming. All right, this is a new candle here, the new candlestick here that started forming. And I'm sure that you already know where candle or how candles open and close. Basically, if you don't know that, then watch our previous video on how candles open and close. So now you have each candle here being formed in 24 hours. So when you move down to the daily time frame, you equally map out your key levels, the levels you're looking at. Now remember, when you map out these levels, when you move down to the smaller time frames, you still have all of the levels that you've mapped out. So basically, the lines, these lines you use do not disappear, right? So even if you don't see them there, then you just see other key levels that you still need to map out, but those levels are still mapped out. That's the importance of doing your analysis. So now we have the daily time frame where we've said that each candle is being formed in a day. It means that it takes 24 hours for each candle to be formed. So on this daily time frame, we discover that we have the breakout or a downtrend has been broken. All right, so we already set a trend line is valid when it has been tested at least twice. So you have 1, 2, and then you have a downtrend has been broken. You basically have like an inverted head and shoulder here, where you have the downtrend has been broken, and then we have the introduction of a new trend. If you don't know how to do top-down analysis, make sure you watch our other video. So we move now to the 4-hour time frame, and on the 4-hour time frame, remember, each candle is being formed in 4 hours. It means that it took 4 hours for this candle to be formed, for this candle to be formed, for this candle to be formed, and these bigger time frames affect the smaller time frames. So you basically want to know how these time frames, these candles are being formed, so that you're not out of track. You're not out of track basically. So on this 4 hour time frame, what can you see? You're seeing the formation of highs, higher highs, higher highs. So basically, we're going to see that we're experiencing an uptrend formed, and then basically here you'll be waiting for like a retracement, all right, to this level, and then you have the next high being formed. But now we're not talking about analysis, so let's talk about the time frames, and then you move to the next time frame, which is the 1 hour. Now remember, I set this up basically based on what I wanted to see on my chart, based on the number of times, the time frames I wanted to see. You can set it 2 hours, 3 hours, it depends on you. So on the 1 hour time frame, one candlestick is being formed in 1 hour, and that's how it moves down right down to the 10-minute time frame where one candlestick is being formed in 10 minutes. So you don't start your chart, or you don't start analyzing a pair from a smaller time frame. You start analyzing a pair from a bigger time frame. Like on the 4 hour time frame, we discover that we're looking for a retracement. Price has retraced to a key level where we'll be looking for buy entries, because this is an uptrend. So basically, after seeing some rejections here, we'll be looking for buy entries. But when you come down to the 15-minute time frame, you discover that price is at a resistance zone or at a consolidation zone, where basically you might be seeing some people. Now, if you had to analyze this pair from the 15-minute time frame without looking at the bigger time frames, you're just easily going to plunge into entering a sell, thinking that, okay, no, since price is at a resistance, it's going to quickly run down to this level. It could, but you should be aware that on the bigger time frames, you're just looking for a retracement or a little a confirmation to enter your buy, depending on your analysis. But so that's my analysis. As you can see, on the bigger time frame, I'll be looking forward to a buy on that pair, because I'm basically experiencing higher highs and higher lows. So now, thank you for watching this video where we've talked about how to navigate time frames. All right, if you do not understand anything, feel free to comment in the comment section and drop a like, share, and subscribe to this channel, where we'll be sharing a lot of insight, especially as a newbie into this industry. Thank you for watching, and see you in our next video.